Hello, and thanks for joining us today. I'm really glad that you could be here. So look, how do you really have financial peace of mind, in your life, personal and business? It's what we all want. It's why we all work. It's why we all own businesses to be able to accomplish that. But very few people, even owning businesses, ever accomplish that because of a lot of mistakes they make. So today we're going to stop that, and we're going to put you down the path to create true financial freedom. And with us today to make that happen is Derick Van Ness. Now, he's a wealth strategist who is passionate about helping people reach their full potential. And his company, A Big Life Financial, is focused on removing the mystery and misinformation surrounding money and financial strategy so people can live their biggest and best life. Now, Derick believes that each person has something unique and valuable to contribute to the world, but that most people are never able to access that gift due to fear, doubt, or worry related to money. So his mission is to eradicate that fear and fundamentally change the way that people think about and utilize money within the next generation. Derick, thanks for joining me today.
Happy to be here, Ty. And I have to say you handled that maze of big, crazy words quite well.
You'd be surprised, man. I get some bios with like some words and I'm like, wow, like is everything here 9 syllables? Like, can we just go less than 9 syllables potentially? So I appreciate that. I'm glad to have you back, man, because I know you're the guru in this space. And it's funny because before we even start, we're talking about inflation and a lot of stuff, and I want to jump into that. But let's talk about that right now. What do you think? I mean, with what's happening now post COVID, what do you think are some of the big things that we should be on the lookout for when it comes to creating financial peace of mind that we want to have?
Well, the fundamentals are still going to be the same, right? Be really good at what you do, get out there, make money, create value, be smart about taxes, save, put your money away. But within the sort of the macroeconomic scenario and ecosystem that we're working in right now, we definitely have a unique set of circumstances, right? We've got half the, a certain amount of businesses limited or shut down. We've got the government pumping a ton of money into the system. And we've got, real estate skyrocketing due to lower interest rates, and then also moratoriums on foreclosures and all these things. So we have a lot of elements happening, right? So the question is like, how do we make sense of all this? And I think there's a couple of really big elements, but the one that you mentioned there, inflation, I think is something that we want to pay attention to, because I actually released a video today on my YouTube channel on something I'm calling the invisible crash. And it's this idea that inflation is very likely to happen, in my opinion. I know there's a lot of differing opinions out there, but as we were talking about before the show, the government's pumped, an extra $5-ish trillion into the economy, maybe more to come. When you look at the money supply, like how many dollars are floating around in our economy, if you just Google that and look it up, it's gone from basically 4,000 billion, so like 4 trillion, to like 6.8 plus trillion. If you do the math on that, that's about 60% more dollars out there floating around today than there were last February, right? So 14 months ago. So there's just a ton of extra money out there, and we can look at all these other elements, but to me, that's like the elephant in the room, right? If there's that much more money out there floating around, chances are really good that dollars are going to be worth a little bit less, or people are going to be a little more eager to part with them because they're not so hard to get. And if that starts to happen, we're going to see some inflation. Prices will creep up. We've seen some really weird spikes in certain areas. Some of those are inflation-based probably, but a lot of those are due to other circumstances, like housing shot way up. But a lot of that's because people aren't moving. I think a lot of builders thought that there was going to be a slowdown in the economy, and there wasn't. So building slowed down just a little bit. A lot of millennials are finally getting to the point where they can actually pay for their student loans and buy a house. So they're coming into the marketplace, and that's just created a lot more demand. And then on the flip side, building those new houses, lumber prices have gone way up because there's been a ton of demand for that for a couple of different reasons. And a lot of those lumber mills had to slow down and got behind with COVID. So now they've got to charge more, or they can charge more. So there's a lot of supply and demand stuff going on just in general. But I think inflation's the big elephant in the room, that there's so much going on as far as extra money floating around that it's going to degrade the value of the dollar. And I've seen a couple of the big hitters, Ray Dalio's firm, they were talking about how the dollar has lost significant value in the past year. And what I think is going to be really interesting, Ty, is we could have something, this invisible crash I was referencing, a situation where the stock market looks like it's going up. And let's say it's going up 6%, right? Like last year, people, we had a crash in March or April, the markets recovered. And at the end of the year, people are like, hey, I'm actually up 10%, 12% on my money in a lot of instances. But then you look at what Bridgewater was saying, and they're saying, we think the dollar lost 15% in value. So you think you made money, but you may have actually gone backwards in your purchasing power, right? You have more dollars, but they're worth less. So you think you're winning. If that were to continue, even if the market flattened or we got say 6% this year in the market or in some other investment, but the dollars went down 10%, you're actually losing money, but you think you're winning. And it's this very smoke and mirrors thing that I think could happen. And I think you ask, what should people know about? I think this is something to be aware of. We need to watch not only what's happening with our assets, but like what's happening with our purchasing power. If the same amount of dollars buys less stuff, then we need to be aware that we need to be outpacing that, or we're actually getting behind, even if it looks like on the charts we're going up, because we're going up slower than the cost of other things around us. Does that make sense?
Yeah, it makes a lot of sense. And I'm glad you explained it, because we all hear about inflation, man. And I'll be honest with you. I mean, being an entrepreneur and CEO of a financial services organization, I can't stand like financials and all that stuff. And I think a lot of entrepreneurs are the same. So
Yeah.
I don't think a lot of people truly understand how this affects them. We hear about inflation all the time. I don't think they do. So you've talked a lot about this, what happens, right? We have all this bailout money, all this stuff is released to individuals, to businesses, et cetera. Tons of money pours into the country from the government. That dilutes the value of the American dollar. So here's the question. What's the bottom line? How does it really affect us? Because we hear about inflation, but I want to know, does that mean my mortgage interest rates are going to go up? Does that mean the interest rates of my credit cards are going to, like, how directly as a consumer or as an entrepreneur does this really affect me? What do I really expect to see over the next 1 to 2 years?
Yeah. So in 1 to 2 years might even be, this is going to sound funny, but it takes time for this money to trickle through, right? A lot of this money, if business owners are listening, you know that the money is sitting in the pockets of the business owners right now. It hasn't gone down to the employee level yet. Wages haven't really increased. But a lot of the business owners I'm talking to, they got these SBA loans, these EIDL loans, these PPP loans. I got a guy who owns 5 or 6 auto shops, and he's like, hey, the government basically paid my payroll for the last 6 months, but we didn't even experience any loss in business. All that went straight to his bottom line. Right. So a lot of business owners are sitting on this cash, and I think a lot of them are thinking, what do I do with this money? Like, I know I'm supposed to keep it in case there's a pullback, but it's not happening. So should I invest this? Should I put it in my business? Should I put it on the sidelines? And these are questions that are obviously each person has to determine individually. But I guess what I'm saying with all this, Ty, is it does depend, but a couple of key things we know about inflation. The first one is if you owe money, debt gets cheaper, right? Because if your mortgage payment's $2,000 a month, or your payment on your lease on your office or your mortgage on your building is $2,000 a month, if inflation goes up and dollars are worth less, that 2,000 is easier to come by, right? It gets cheaper to pay. So debt gets cheaper. We also know that assets like real estate, even the stock market, gold and silver, other kinds of things that hold their value, that have like intrinsic value, those are going to increase, right? Because if there's more dollars, people are willing to pay a little bit more for Apple stock or Microsoft stock or whatever, assuming those companies continue to do just the same, right? You're gonna see that adjust for inflation. You're gonna see the price of housing adjust for inflation. You're gonna see other what they call equities adjust for inflation. A lot of times they would say that's gold and silver and oil and gas and food and that kind of stuff. Oil and gas is kind of a weird one because we're kind of going through this transition of economic change with green energy and that kind of thing. So I don't know how that's going to impact that, but these types of assets go up. So we see assets go up and we see the price of debt go down. And so we know that people who are debtors are winners, people who have assets are winners, and people who are in the middle generally are losing. If you don't have a lot of assets, but you're sitting on cash, or you don't have much cash and you don't have many assets, unless your wages increase, you're losing, you're falling behind, right? Because those dollars that you're getting are becoming worth less. So as a business owner, if there's ever been a good time to get debt, right now might be it, right? Obviously, everybody's business is different, so this can't be like advice, but just as a general statement about debt is probably going to get cheaper, and it's already cheap right now, right? Interest rates are really low, so you can get money cheap, and it's probably just going to be worth less or easier to pay back in the future. Having assets, it's the same thing. So I think if you're in one of those situations where you have an opportunity to look for assets and take on debt, these are pretty favorable conditions for that. Now, the flip side is this, Ty. A couple of years from now, if we do go into some inflationary times, if we just look back at the 70s and what happened there with a ton of inflation when we went off the gold standard and some of the fiat currency situation, what we know is that at some point the Fed is going to have to ratchet interest rates back up to curb that. In other words, make it more expensive to get dollars, and they're essentially going to be buying back a lot of the dollars that they've given to the government. And so we're going to have to see that come back the other direction. So you might see a spike in real estate and some of these other things, but then there might be a correction somewhere down the road when they've got to kind of come back to reality, right? Once we sort of get through this this weird scenario. So I don't want people to go crazy, but I want you to think about how does that apply to your situation? Debt's going to get cheaper, assets are going to go up for a while, and then they may correct. So what are the right decisions for us? I think that's just the big picture stuff I would be considering as a business owner.
So we just talk about real estate. I'm in Florida, and I owned a mortgage company. The mortgage crisis is why I'm here. I lost everything in that mess. And I remember, after the
Mhm.
fact, going, how could we ever expected the values to not stop? Like they just kept going up and up and up. It's absurd down here now, man. Like it's at a rate we've never seen because California and New Jersey, New York, all these states are shut down. Like all these people are coming. Like our home price is $1 million
Yeah.
and higher, up 90% from last year. Like it's almost double of what they were. So it's just
Yeah.
absurd. So what's happening with real estate? I mean, what can potentially stop the madness of these values going up? Because we know what it was last time. We don't want that. But there has to be some logical point where values taper off. But I don't even know what could cause that to happen.
Yeah, the biggest thing is if they ratchet up interest rates. So in this, once again, inflation is a factor in this, right? Because we think, oh, houses are going up, but if houses are going up 10 or 15% a year, that's actually they're just staying flat if the dollar is actually losing that kind of value, right? So it appears to us that the housing's still screaming up. So the scream up might be a little less than you think. But here's the thing that people don't realize about houses, and this is the same thing for equipment. This is the same thing for business buildings. Those things are bought on a monthly payment. They're not bought on how much the house is worth. How much the house is worth is based on the monthly payment. If you could get a $10 million house for $2,000 a month, guess what happens? All the prices on real estate shoot through the ceiling because it's about how much you can pay per month, not how much the house actually costs, right? It's like reverse engineered out of the payment. So when we raise interest rates, so if the Fed starts ticking those interest rates back up, your $2,000 a month, $3,000 a month, $5,000 a month payment buys less house. So at that point, you just run out of buyers, right? People can't afford to make the payments, so the houses have to come back down. Now, honestly, I don't expect that to happen anytime really soon. I think, and this is me thinking, guy who reads a lot on the internet and pays attention to a lot of things. I'm not like the world economist here, but I actually think the government wants us to go into some inflation and see this happen, this devaluing of the dollar, because it makes it cheaper to pay all this debt back, right? We've already had a debt problem. The pandemic, I'm not even saying the government shouldn't have bailed a lot of people out. I think we'd be in a really bad spot if they didn't, right? When they force people to not be able to work, you got to take care of your people. So now we're in this weird spot. We got to dig it out. The easiest way to dig it out is make the dollars worth less with inflation. Then you can pay that debt off over the next 20 or 30 years with taxes. So I think the government actually wants that to happen. And if they leave us in an inflationary period, we could see those houses continue to go up much faster than we normally think is sustainable because the cost of them isn't rising as much as the amount of dollars, right? The purchasing power isn't going up as much. So I think it's an illusion, right? The fact, like I think everybody's expecting, oh, it's going to happen like 2007, 8, 9, but we don't have loose lending right now. People have more equity than they did back then. So we're going to have a different situation. And I think with inflation, we could see a housing market flatten, which would be like a crash if the dollar is losing its value, because it should be keeping up with the dollar. But if it flattens out, we might just think, oh, the market flattened. Really, it's crashing because dollars are still continuing to be worth less and houses aren't going up to compensate for that. So once again, it's this smoke and mirrors, and we have to kind of lay that inflation layer over everything that we see. So I don't see a crash like we had before. If there is a dip, I think it'll be smaller than we expect because of the inflationary push if it happens in the next couple of years. but I also don't see that the Fed is going to raise interest rates for probably another 2 years. And I'm just guessing here because it kind of depends on what happens. But if we stay that low, I think housing will continue to go up because there is a lot of demand right now and the inflation will push it. So it's weird. It doesn't seem sustainable, but it's not actually as bad as it seems because the inflation is kind of hiding the numbers.
What does it take in this new post-COVID world to really have financial peace of mind? Because it seems like a lot of instability and a lot of things we could fear that are still there to come. So, what are
Mhm.
you finding? Like, what's kind of can give us financial peace of mind in this current climate?
Well, my belief is always this: no matter what the economic climate is, be really, really good at what you do and provide a valuable service, right? If you do that, you can adjust your prices for inflation. You can adjust your prices for whatever. I mean, unless you're on the Walmart model, which is just be the cheapest guy in town, right? No, no quality, no anything, just you're the cheapest, which most people can't win at. You want to find a way to separate yourself from the pack. Be unique, offer something different, really, really be a value creator for the people that you serve. If you do that, I think you're fine. You're insulated. As the market rises, you'll be able to charge a little bit more. And I would pay attention to that as a business owner, right? What's happening with my competitors? What's going on out there, so that we can keep pace with the proper pricing for what we do. But if you're on the Nordstrom model, which is or the Neiman Marcus model or whatever you want to call it, it's high value, right? Be really high value and you can charge a little bit more. The truth is, people are going to be more flush with money in a lot of cases. So they're not afraid to pay for a little extra convenience or pay for somebody who really cares about them, is going to take care of them, going to do the right thing, as opposed to being a commodity where there's a million guys who do it exactly like you. So you got to be the cheapest or you don't get the business. I truly think that's your safety net in everything, right? And Jeff Bezos said this a while back, and I thought this was maybe the most profound quote as we go through all this technological change and political change and tax change and everything else. Somebody was interviewing him and they asked him, how do you plan to keep up with all these technological changes in the world that's changing so fast? And he said, we're not building Amazon based on what changes. We're building it based on what stays the same. People want goods and services. They want them cheap. They want them convenient and they want them fast. If we do that, all that other technological stuff will take care of itself. But if we can do that, we'll stay ahead. So I think we want to look at in your business, what's the core that you offer your clients and what's not going to change, right? And how do we get really good at that? And then all the other stuff we can adjust as we go. But if we get that part right, everything will take care of itself. So I think that's where your best safety net is. I think learning to, it's always wise to learn to consistently save money because savings is the gateway to investing. I know a ton of business owners like leave all their money in their business, but I think that also leaves you vulnerable. So learning to take chips off the table and pay yourself first, right? I know that's like the most basic advice of all, but so many people don't do it. Pay yourself first and then put that money in places where it always goes up. And we have a ton of strategies that do that. I think the other big thing you can do is there's a ton of tax opportunities out there. If you're making good money right now and you want to keep more of it, taxes are the biggest cost in your life. So if you get really good or work with people who are really good at tax strategies, it's one of the biggest things we're able to do for business owners. You just keep a ton more of the money that you make. You get a lot more efficient, right? Same amount of revenue, a lot more bottom line.
What about mistakes? Well, what are people doing wrong right now financially?
I think a ton of people over the pandemic turned into gamblers. They turned into, oh, I want to guess the stock market, and you see these really interesting things like the whole GameStop thing, or the Dogecoin thing that's going on right now, where there's a lot of people putting money into things, just speculating, right? And the difference between speculating and investing is speculating is guessing that something's going to go up. Investing to me is based on something has value and I'm going to put money into it based on that value, not based on some guess at a future value, right? If you're investing on this is solid right now, this has value right now, and you put money into it, I think that's investing. Guessing that something might continue to go up, that's just the greater fool theory. It can work, and there are people who are good at it, but it's gambling for most people because most people don't have the knowledge base to do it. So I think that's the biggest mistake I see. The other mistake I see, and this is going to be kind of silly and super kind of nichey, but a ton of people have student loans or other things put on deferral because of these government programs, right? So they're not paying that $1,000 a month student loan or that $500 or $2,000 a month student loan, and they're going out and they're incurring expenses because they kind of forgot, oh, I got this extra money. I, I, I still have my job. I don't have to do that. I can go buy a nicer car. And we had someone who was looking at we teach something called the money maximization model. And it's a way to use life insurance to grow your money safely and get tax advantages and a bunch of cool things. And she was going to put money into that. And I said, well, what happens when this student loan comes back in a couple of months? Are you still going to be able to put money into this? And she was like, let me get back to you on that. And she never called me back, right? Because she hadn't considered that I have this expense out there that's kind of been put on the shelf, but I need to deal with reality of the fact that it's coming back and I'm going to have to take that on. So I see people taking on expenses they shouldn't be taking on because there's a false sort of respite from some of these expenses that they have. And I don't think that's a good habit. So I think we need to be really honest with ourselves about what's happening financially right now more than ever, because there is a lot in play.
What tell me more about the money maximization model.
So what I find with business owners is the big problem is you kind of have to decide, do I want to grow my money or do I want to have it available for my business, right? It's kind of hard to do both. So you either got it sitting in a savings account or something similar, not growing, or you've got it invested somewhere that may not be liquid or might be hard to get at, or it's inside of a qualified plan like a 401k IRA. You got to have penalties to get to that money. So the money maximization model is a specific way to use life insurance that's structured for cash growth, not for death benefit, right? So these are really set up to grow your money inside of. It's a place where you can get a consistent rate of return. At the time of our recording right now, that's 4% guaranteed on your money, which is 10x on a savings account. Plus, we use dividend-paying mutual companies, which means they pay a dividend on top of that 4%. So a lot of people are getting 5.5, 6% on their money, depending on the insurance company they're with, safely, and all of that money is tax-deferred growth, or if you use the loan provisions, which is kind of how we teach it, you'll never pay taxes on that growth. So it's a really nice, safe place to grow and store your money. And it's totally liquid. So you can use it for your business if you want to go buy a new piece of equipment, buy a rental property, a building for whatever. You've got cash to do that. Or if an emergency comes along, you can get to the cash and make sure you stay in business and take care of your people. And then we teach people how to turn that into their own banking system, right? If you can't get cheap money, you can always use your policy to fund buying a car or equipment or other things. And then we teach you how to pay that back to yourself plus interest, which might sound really crazy, but when I sit down and show you the math, it's incredibly powerful to not pay that 5% to the bank, but to collect it yourself and put it back into an account where it always goes up and can compound. It's pretty huge. So yeah, so it creates a system where people, once you put $1 into it, it never stops working for you the rest of your life. And it's all growing very tax efficient.
Wow, that's really interesting. What else? What else is happening right now that we don't know about, we haven't discussed, but yet we really should be aware
of? Let's see. So there's a couple of things that I think are important, and I don't know that they're quite as relevant, although I think they might expand. A lot of business owners don't know that there are a lot of tax strategies out there. One that we see that's really prevalent that people are totally unaware of is research and development credits, but also other types of credits. Last year, if you didn't get PPP, there are like hiring and retention credits that can get you money back. There are credits if you hire certain types of people, a lot of if you hire veterans or ex-cons or ex-military or part-time students, there's a bunch of money that you can get back on those types of hires because the government wants those people working. The R&D credits are super potent if somebody's in software, manufacturing, medical, anything that uses engineering, like construction companies, those kinds of things. There's a ton of R&D credits. Like we do this for a ton of dentists and doctors and these kinds of people, and they're getting $40,000 to $75,000 back on a 3-year look back, and that's real money, right, back in their pocket that people are totally unaware of. And so I think there's a lot of this tax efficiency that people just don't even know exists. Regular CPAs aren't even looking at a lot of this stuff because they're so worried about getting you write-offs, but they don't look at the other side of the equation. How can we get refunds, rebates on the money that we have spent? And in addition to that, a lot of people, once you get over the two, three, $400,000 earning mark, like you've written off everything you can. People don't know there are some things out there that are tax advantaged investments, right? Like it did come up a lot during the election. President Trump was talking a lot about the opportunity zones that they had created, which is a place to take money and redevelop real estate in inner cities, where you can get massive tax advantages in addition to the ROI that you would normally get. You can also do that with certain types of oil and gas investments and other types of land and low income housing. There's a bunch of stuff out there. People just don't even realize that. And in some of these cases, you put money into it, you get to write off 50, 75, 100% of that money. If you're paying 37% plus state taxes, and you put $100,000 into something and it saves you 40,000 in taxes, that's a pretty nice tax savings. You could think of it as ROI. Technically, it's tax savings, but then you get the ROI on the investment and you get your money back in a couple of years. And it's like, wow, I just saved myself, not deferred, but literally saved myself $30,000, $40,000 of taxes. That's a really big deal on that kind of money. So people just aren't aware that these things exist, and we want more people to be aware. Now, if you're sub 200,000, you're probably not there yet. But once you start getting 200, 250 taxable income and above, taxes become a really big deal. And I think knowing about these things is really important.
You mentioned, a lot of people, in the accounting space example, aren't talking about these things. What financial experts should we really have in our corner?
Boy, that's a good question. I think definitely having a good CPA or a good accountant, and somebody who does taxes, a tax specialist, may even be better than a CPA, because the CPA designation doesn't have anything to do with taxes, right? Like they can, and there are some really good CPAs, but I think a good tax person, once you're paying over 10 grand a year in taxes, good tax person is absolutely worth their weight in gold. The more you make, the more important they are. In addition to that, I think good financial advisors, probably one or two. People may not realize this, but there are specialists, I would say, on the kind of the life insurance annuity side of things. And then there's also specialists on the investment side of things. I personally am not a huge fan of the stock market, because I think for most people, they just don't know what they're doing. But having an investment advisor that can help you navigate the stock market, help you navigate alternative investments or these tax advantage investments, I think you should have that. If you're involved in, and then things that are industry specific. If you're involved in real estate, I think you should have yourself a mortgage broker and you should have a real estate agent. If you're involved in stuff that requires a lot of equipment, I think you should have a good leasing guy or a good auto finance professional. But financial professionals, a lot of like the stuff that you guys do, having access to capital, making good solutions that way, because you can just get clobbered if you don't know what you're doing in the credit game, right? So a good credit professional. And then I think a good, as funny as this sounds, the more you make, the more important it gets. Entity structuring and estate planning person, a lot of times those kind of go hand in hand. But somebody who can help you to structure businesses, there's a ton of tax efficiency in being able to separate things. You can also protect yourself from liabilities and so forth. I think if you have most of those, you're pretty solid. And if you really want to go the extra mile, a cash flow person, like a cash flow expert, someone who can help you understand money in, money out, what money's making you money, what money's being wasted, fixed expenses versus variable expenses, and what marketing's working, what isn't, but just someone who can really help you track and make sense of what's going on with the money inside your business. I think a lot of business owners look at top line, they look at bottom line. They don't look at all the stuff in between nearly as much as they should. We've got a guy on our team that really helps a lot of people with that, and it can make a big difference for people.
Speaking of your team, Derick, where can everybody go learn more about you?
I think the easiest place is biglifefinancial.com. Pretty straightforward. We have a button up in the corner if you want to do like a consult or find out more about what might apply for you. You can just click the work with us button up at the top. It'll allow you to schedule on our calendar. But yeah, if you have questions about taxes, if you're not quite sure what you want to do investment wise, or you feel out of control with that stuff, we'd love to help you look at it, clean it up, see if there's some opportunities. You'd be amazed how many people can just do a couple of financial moves and clean up all their cash flow, take all this money that was going to debt. Now it's going into something that can grow for them and just totally swing the tide from flowing against you, paying interest on everything to flowing towards you by collecting interest on it or growth. It's a big deal.
That's awesome. Derick, thanks for coming on today.
Happy to be here, Ty. Thanks for having me.
So listen, you're watching to listen to this because I'm sure that having financial peace of mind is pretty important to you. And so what you really want to do is go to biglifefinancial.com. First of all, I don't think I've ever seen as many resources as what Derick has on his website, from courses to newsletters, blogs, podcasts. He's even got a great book on building wealth. It's 100% free right on the homepage of the website, biglifefinancial.com. So make sure you check out biglifefinancial.com. Look, this is the mistake I see entrepreneurs make. Most of us think we're going to build huge business, exit, and then that's our exit plan. Like, that's the whole thing. But statistically, very small percentage of entrepreneurs ever really reach that level. So just to be safe, you need to make sure you're protected. COVID has shown us how unpredictable life can be. So you really need to make sure that you have a plan to build wealth, and grab Derick's free book on his website at biglifefinancial.com. That'll help you get started amongst their many, many other resources that will help you with obtaining financial freedom and really building wealth in your life. So make sure you visit biglifefinancial.com and make sure you grab this free book on building wealth, as well as checking out the other resources that can help you really, truly have financial peace of mind. Thanks for tuning in. Have an exceptional day.